Hi everyone, you're all very welcome to another trader interview. Here with us today we have Tom, who is obviously one of our funded traders, one of our successful traders, been with us now for a little bit of a time. Has had fairly good success with us now over the last few months or so. So today is obviously a bit more about Tom, his style of trading, how he kind of fell into trading as well, and more about his long-term goals and aspirations as well. So obviously, Tom, lovely to be able to welcome you to the call today. Obviously, very, very welcome. Let me. Do you want to talk me through a bit about yourself?
Yeah, certainly. So I guess I started trading professionally a long while ago now. When I finished uni, worked for a small company down in Bournemouth, believe it or not, which is where I went to uni. I was a prop trader for about 3 years there. We traded mean reversion spreads. So instead of people trading outright, where they're buying something and then they're selling it, or selling it and then buying it later. Every time we bought a spread, we were essentially buying something and selling something else, or selling multiple things against it. So quite a different style of trading. But as I said, that's kind of what I first got into. It was good, but really, really based on volatility, and there just wasn't enough volatility really to make the spreads work. Because if you can imagine the spread between an outright being 1 pip, the spread between a spread is huge. Again, it's probably hard for people to work out and understand how that can be, but believe me, it's a lot bigger than you think, which makes a massive difference. As anyone will know in their trading, when the spreads are wide, it's harder to get in and out. So that's what I started doing after uni. I then went to an oil trading company. I worked there basically on outright oil, and eventually went to an investment bank. So I kind of ended my professional corporate career at JP Morgan. And when I got to JP Morgan, I started working in credit. I was working as a trading assistant. I didn't really enjoy what I was doing, simply because I wasn't really able to do what I wanted to do, which was actually be part of the trading side of things. And to be honest with you, I'm just someone who probably finds it quite hard to work under someone else when I kind of want to be where I want to be. I'd much rather kind of go it alone and really give it a go. So I got an opportunity to leave, and I left, and I basically helped my mum and dad out on a project. Once that had finished, they have a farm over in Brentwood. And basically they had no idea of really how to make any money out of it. So I was into meat quite a lot, and I took it upon myself to learn a bit of butchery and basically support their farm, which turned into the business which I've got now, which is Thomas Jones Butchery, where we ship meat across the whole of the UK. Quite a few of the guys, I think, at Alpha have had a go, and they think it's not too bad. So
I must get it shipped across Ireland out.
Well, we I think we used to be able to do it quite easily, but with the with Brexit stuff, it's really been a pain in the arse. So it's not as easy thing. But anyway, so I started that company in 2018, and now there's kind of like 6 or 7 people here working, and I'm pretty much just overseeing it. But the goal was always to get back to trading, because it's just something that I've always been interested in. I think anyone that's kind of money orientated is going to be interested in trading. There's always, I guess, the allure of making lots of money. Maybe it's not as true as what people like you to believe, but so the goal really was to have, I guess, a stable, dare I say it, like a bread and butter business, which operates on its own, and in bricks and mortar, because that's tangible and real. And once I got to the point where that was kind of, I guess, not doing everything on its own, but a large portion of what we doing it by itself. My goal was always to get back to trading, just mainly from a pure, I don't know, interest more than anything else. I would say passion, but I just find it such a cliche term to use.
Yes, certainly, yes. Yeah, of course.
It's the first thing that someone says in their interview. Oh, I'm very passionate about this. Are you? Do you even know what we do? So yeah, but no, I've always been interested in it. And as I said, I think for me, it's been a real journey in terms of learning. And I would say that I truly don't believe that anyone can be a profitable, consistent trader until you've been doing it. I would say at least 4 to 5 years. It's just something that just does not snap quickly. There are probably, you know, people out there that can, but the biggest thing that stops the majority of people is the capital required to keep going when you lose. Ultimately, that's always going to be a problem.
Yeah.
And I guess once you've had a few losses, you know, as we've all been in the same position, you want to chase it. So that's probably the hardest thing. But my journey with Alpha has been really, really good. Again, as I've said to Alex, you know, that the main reason for joining someone, you know, or a company is so that we've got a bit of, or I've got a bit of accountability. I've got some real metrics. You know, there's actually, you know, some guys at the other end who are there to support as well, which I think is really important. I would say that's massive compared to other prop firms that I've worked with previously. Obviously, you've got the massive benefit of not having to put your own capital down, which does make a huge difference.
Of course, yeah.
Because, you know, if you're paying, let's say, £1,000 for a challenge and you pass it, and you've got a 200k account, and you in your first 2 weeks you make £5,000, well, you know, brilliant. You know, you've made all that back and some. So I think that's the biggest positive. But above and beyond that, for someone who really wants to actually trade professionally, I think that, you know, the biggest take home points are that, you know, you've got real support and real people behind it, which just makes a huge difference, you know, because you don't want to be sending emails into somewhere where you don't think they're going to come back. Yeah, that doesn't make any sense for anyone, right?
Or maybe not going to get paid out either. Pay the money, do the challenge, and then potentially not get paid out either. That's a big thing.
Well,
in the industry.
Yeah. For sure, yeah, I think that's definitely something that everyone needs to be mindful of. But, you know, really, you need to work with a trusted company and ensure that you're doing the right things on your own. You know, you should vet everyone, and I guess that's why these kind of interviews are important, is to see that there are actually people who work there and who do get paid out, who have been paid out, who continue to work with the company that you're joining onto. So yeah, I guess that's kind of my journey from prop trading a while ago to where we are now.
And I suppose then in terms of strategy, so obviously your journey has obviously changed. The assets you've traded has changed. Like when you talk about your strategy now, are you more short to medium term, medium to longer term? Are you a bit of both? What assets do you tend to look for now currently?
Everything's very short term. I can't stand the idea of leaving anything on overnight. I don't think I've ever left anything on the overnight, you know, since I stopped trading spreads. Even then, that was just a horrible thing to do. Particularly, you know, we were trading quite large size volume stuff, and the idea of being, you know, long the DAX and some bad news comes out overnight is just sort of, it's haunted me forever, I think. So everything's pretty short term. I would say my trades really are anything between 5 minutes to a half an hour. Okay. I think, I'm really kind of focused around the open, focused around the kind of half an hour after that. That's kind of where you get the real moves coming in that are probably going to dictate what happens for the rest of the day. I think, you know, strategy is great, but the one thing that I'll still admit that I find hard, and I'm sure other traders, if they're being honest with themselves, will find hard, is actually sticking to your strategy, regardless of what it is. I think nearly every strategy is probably profitable. It's just not profitable in the way that most people think it will be. You know, you think, oh, I'm going to have an 80%, hit rate, which is just not going to happen ever. Yeah. Really and truly, I think a good trader is probably going to have 50% right. That's probably it. Maybe not even that. But what's important is the risk to reward, and I think when you've had a couple of losses, trying to stop going again.
The revenge trading, the discipline, the mindset, having that tolerance.
Which I'm still struggling with now. I'll admit it. I'm not going to say I'm flawless. I'm very flawed. You know, it's just that as you learn, I think the thing you've got to try and do is just slowly but surely try to at least move your own moving average the right way, if that makes sense.
Yes, certainly. And when you're trading, you're more volume based, then you're not looking at all these different indicators. Are you more volume based because you're trading open specifically?
I don't really use any indicators. I think I'll have a moving average there. I just very, very, very plain trading view, trying to just work out where the supply and demand is, where the resistance is, where the support is. And again, I think my trading, if I stick to the plan, is very, very good. Can make a lot of money. The problem is sticking to that plan, particularly, as I said, you know, when you're not. And that's something that I'm trying to work on, I guess, genuinely work on every single day, is to just be that bit more disciplined. And I think that's, you know, every strategy will be profitable. The thing that's not profitable is the people behind it. So that's something
it's a continuous battle. Risk and I think in discipline is always going to be a continuous battle, day in, day out. So would you then look at, I know you talked about then the spreads, not carrying trades overnight, then would you take fundamentals into consideration, or are you just purely a price action man?
Because of the nature of kind of how quickly I'm trying to make the money and what I'm not looking for huge moves. It's pretty much price action alone. Really, all I'm looking for most of the time is to find a support and resistance area, whether that's on a 5 minute chart or 15 minute chart. Obviously, the bigger time frames have more impact, but and really trade where that breaks, because what I've kind of come to learn is that most of the trading around support and resistance is very, very hit and miss. But the one thing that I would say I've noticed from just looking at the charts, probably more than the average person has over the last however long, is that when there is support and resistance, the quickest money to be made is when that breaks, because there's automatically, there's an imbalance there that has to be then met with another support or resistance area. So I think what I'm trying to do really is, as I've said, is just find those areas, those zones, and basically trade against where people are thinking it's going to be. Again, that does take some practice, but trading is counterintuitive. What you think happens is probably not right. It's the complete opposite of what you think should happen generally happens.
Exactly. I think that's why so many traders lose as well. Like, you took 80-90% of retail traders losing the markets, and they're all following the same process, same thing. And the banks, the bigger institutions, the bigger fishes in the market can spot that straight away.
Yeah, definitely. I mean, it's the biggest and most obvious thing is, that you have a bid up day where there's, let's say equities up 0.5%, and all of a sudden it comes to a known zone from, I don't know, a few days ago that we're at, and it goes another 0.25% up, because the reality is that as soon as the banks see that, they know people are enticed by a move going up. People think I better come down, and that does make sense. That makes sense in life, right? Things that are cheaper, you want to buy more of. Things that are not as expensive, you want to buy less of. So it's the complete opposite way. And I think the biggest thing that I've kind of learned is, what I've still, again, find hard to do today, is whenever there's a move up, is to try to not even contemplate the idea of going the opposite way, because it's generally 9 times out of 10 going to keep going. And when you see those big fat green candles, you know that they've all pushed price to another level for a reason. And once it's there, it's going to find it hard to come back down. So you need to find other reasons, I guess, to trade counter trend, if that makes sense.
And within that as well, all they're doing is taking the liquidity out of the market, taking all them retail stops out, and then you're factoring back into that 80-90% of retail traders that fail because
I mean, look, at the end of the day, well, I'm sure whoever watches this will ultimately, there'll be a few people that want to learn a bit more about it, but ultimately, the market is actually controlled probably by not that many people. They push the price from one area to another because that's where their buys are and their sells are. Once they've filled those, it's going to go the other way, but that's going to take a long time. So again, when you work that kind of stuff out, again, I have to keep telling myself this throughout the day because you forget it. But reality is that if there's a handful of people pushing a market, which there are, once they've got their fills at each level, the price will then start to come the other way because they'll want to start making money again. But until that actually happens, there's no way that even me trading 20 lots of the DAX is not going to push anything anyway. Because there's someone out there trading 200 or 300 lots,
or even in some cases thousands. I've seen,
of course,
particularly if it's like on euro dollar or S&Ps or any of those highly valued asset classes,
for sure.
So I know obviously mindset and discipline is obviously hugely important. So on a day-to-day perspective, how do you handle your emotions?
So I think 7 out of 10 days very, very well. I'd pretty much start every day the same. I'll get up in the morning, probably about 6:30. I've learned to try not to get involved too early, because I used to trade when I was trading spreads. We would always trade the futures open because that was quite good. But actually on outright, that makes no sense at all. You get a lot of moves that start and then get faded the opposite way. So actually that's not profitable. So around 6:30, I'll go and stretch and I'll start meditating. I'll try to just kind of basically envisage what I want to see and what I want to do with the day in terms of my trading. Try and think about exactly what I don't want to do, so that I'm trying and forcing my brain to stop that when it starts happening. And that's really going to set me up for getting on the charts. In terms of actually looking at it, all I'm looking to do every single day is spot where where the highs and lows are, and really what's the probability of it going from one to the other. And generally, if we're closer to one, it's probably going to go back to it. It's not going to come the other way, because that's what intuitively people think is going to happen. And in terms of actually emotions, I think the biggest thing, again, that I still find hard is to stop revenge trading. And again, if there's another one take home, it's like, if you've had one loss, don't make it two losses because you want to be right. Even saying it out loud now, I kind of wish I had this little bit recorded. I could play it to myself.
Yes.
Because that's the biggest problem. And I think that genuinely the best and most gifted traders in the world are ultimately the people who can handle the losses better than anyone else, and just think, look, I've had loss, no problem. It didn't work out. Why did it not work out? Okay, it was because of this. And how do I go again? Right, well, I'll wait. And I have this little thing where it's like a 15-minute rule. So I have a timer, which like an egg timer, and I just flip it. It's 15 minutes, and that's a really, really good idea, particularly if you've had a couple of losses, you've had a bit of a rough ride.
Interesting. That's a really good idea. I never even thought of that myself. That's really good. So I suppose with your background, with your experience working in the institutional side, working in the professional end of it with the bigger institutions, how would you define a good trader, or in your opinion, what do you think are the really important qualities that traders nowadays need to have?
I mean, from my experience, it's never been harder to make money, and I mean that because there's so much opportunity. So when you're kind of fooling yourself about the opportunity, again, it's the mindset that really, really matters. Again, I'm not flawless. I'm the same. Everyone looks at me and goes, "Oh wow, I wish I had that. That would have made so much money." So the reason I say it's never been harder is because particularly if you're trading intraday, there's so many opportunities that you could take. So it's having the discipline to say, right, well, what's the key signal I'm looking for? What's the one thing that I should be doing that's going to generate the money for me? And once you've worked that out, thinking, okay, but is there enough reward if I get into this? Is there enough ratio between my risk to reward? I guess the biggest thing that when we were trading mean reversion spreads, our risk to reward was very, very poor, because the idea was we were going to make multiple times, we're going to be in and out multiple times, and it was more, I guess, consistent. The problem is when that breaks down, it's kind of the complete opposite of what you really should do. Essentially, you want to have, one or two winners for every 4 or 5 trades, but those 1 or 2 winners, make so much money that it doesn't really matter about those, 2 little ones. So I think, I think it's that overriding, idea behind, I need to make 3 or 4 for every one I lose. And I think if you keep doing that, and the thing I've been doing more recently is particularly with, your guys' dashboard, is looking at my stats. I'm essentially trying to trade my stats and try to trade the market. What's going to make my stats look better? Well, if I make £1,000, but every time I only lose 300, well then, over time, if I keep doing that, it's probably going to make me money over the long term. And I guess, from all the literature I've read, it is essentially a game of making the stats look better and better and better. And if you can just try to harness that instead of trying to, make a quick buck here and there, I've found that I hope is the path forward.
It's a probabilities game, really, isn't it? That's in a lot of probability, really, in a nutshell.
Yeah.
Lovely. And I suppose then when you talked about your stats, are you constantly reviewing your own performance? So let's say, what have I done this week? What have I taken this week? Do you review your own positions more so from a consistency point of view, making sure that you're saying, well, I'm going to do X, Y, and Z, and making sure you're following that through to make sure you're being as consistent as possible?
Yeah, I mean, I do a write up every day. I recap exactly kind of how it's been and how it's been, and kind of how I've felt as well, because I think there's a lot to be said in how you feel at the end, or how you feel during a trading day. Everyone's going to have shockers, right? It's kind of what you do out the back of that. And again, the biggest benefit of working with someone like you guys is not only do you not have to raise the capital yourself to get a go, but you've still got the support, and I can talk to Alex about things and just kind of spitball different ideas. Yeah. But in terms of my own performance, I think the key thing, again, that I would say is really important is trying to get that risk to reward between your winners and losers to around 2.5 or 3. everyone loves to say, oh, 10-hour trades and whatever, but reality is they don't come around, every day. It's just not possible. However, if over time you can just build up those 1 to 4s and 1 to 5s every now and then, that's where you'll really just allow yourself to move forwards. And that's really, as you said, it's all about the probabilities at the end of the day.
Yeah, and progression as well. So I suppose with progression in mind, what's, I suppose, final question really, what's your longer term objectives personally? Like, have you got objectives over the next 12 months, 18 months, 36 months?
Yeah. I mean, so for me, I think the only real thing I would like to do, regardless of the money, is just be consistent. And that's honestly more of a mindset thing than anything else. I think once you get down that road of trading emotionally, you do genuinely need to take a break, because it's very, very hard for anyone, unless you are, the Mike Tyson of mindset, to really bring yourself out of a rut, particularly if you've lost, 4 or 5% off your account or something, because you're only human, and the human reaction is to get it back, and you'll do anything you can, and you'll be risky, and you won't think about the loss. You'll think about what you can make. So I think that's the key for me, is trying to get that consistency. I'd like to have multiple funded accounts. I think that's a really, really good place to be. You can try different strategies. It also, lessens the pressure off each one. So I think that's a really good idea. And I think with you guys, with you guys also, the other great thing is that because the spreads are so low, you do have a good opportunity of being able to get in and out of trades. So anyone who's trying to do something quite quick, I think that's a great thing. But yeah, for me, I don't think it's wise really to focus on the money side of things. I know that's essentially why 99.9% of people are in trading. I get that. But if you do try at least to think about, well, how can I make my results look better on the dashboard? That is ultimately going to be better long term. That's just a fact, because, if you think about a scenario where you've had a loss and it made your results look bad, and you look at it and you think, well, that doesn't look great, you don't want to go again to make it look any worse, if that makes sense.
Yeah.
You're not going to double your position and go, oh, well, now I've made a little bit back. Actually, now I've lost 3 times the amount I should have done. So essentially, that's really for me the goal. And as I said, it's to try and think not about the money, but think, how do I trade the way that I should trade, and taking positions off where you should take them off instead of taking them off, early. Putting your stops where they should be. I think one of the biggest things that I've, really not done very well over the last couple of months would be actually having my stops far too tight. I'm trying to make so much return out of each trade that I'm getting pinged on stops, constantly. And I would say, had I, just been able to harness that, well, actually trade a little bit smaller and actually have an appropriate size stop, that would actually have led me to better results long term too. So again, that's a real big thing for me that I'm working on this month, and for the rest of the year really. And I'm in this for the long haul. I know it takes a long time, and I do genuinely mean what I said at the start. I think you have to be doing it a long time. There's always opportunity, and there'll be opportunity forever. But to harness the I guess the true potential, you have to not give up at the first hurdle. If that means you do a couple of challenges and they fail, don't give up. Go again, but work out why. Don't go again blindly. Go again once you've actually thought, well, this is what's gone wrong and this is what I can do about it.
Learning from your mistakes, really, isn't it? It's really, really important.
Yeah, massively. Again, look, end of the day, it's all easy to say and very, very hard to do. So, it's
a lot easier said than done. A lot easier said than done, Tom.
Nearly everything in life is, right?
Yeah, absolutely.
But trading is one of those very, very unique disciplines where you know exactly how good or bad you are, right now, today. You're going to find out. There's no hiding. When you've had a shocker, you can't hide from it. You've lost your account or whatever. So if that happens, the most important thing, as you said, is not just learning from your mistakes, but thinking, well, one, why do I want to do this? Because really and truly, if you don't really want to do it, you're not going to put the hours in. It does take a lot of time and effort, and mentally, it's very, very frustrating. You can have a good day and make money. You can still be frustrated that you didn't make as much money. So I think that's a real key point.
Definitely. Brilliant. Well, fantastic. Well, Tom, thanks a million for stopping in with us today for a call. Lovely to speak with you officially. Obviously we're meant to do it before Christmas, but obviously leading into Christmas and stuff like that. So good to touch base. So I suppose from your perspective, obviously best of luck for 2023 and everything you do, both in the meat sector, but also obviously in the trading wise as well. And
Thank you.
obviously be very, very excited to see how you progress over 2023 and obviously being able to
Yeah,
see.
we should book in a 6 month call. That'd be really cool. I'd like it as well. It'd be great for me because I could actually think, right, well, in 6 months, what I want to be able to say on the next call.
Absolutely.
And I think, again, important for everyone else to actually say, well, in 6 months' time, this guy's still here. So, it is a company that's paying out and actually is doing something, right?
Yeah, absolutely. Brilliant. Well, look, have a great afternoon. Thanks a million for stopping through.
Cheers, mate.
And all right. Take care.
Have a good one.
Cheers.
Thanks, mate. Bye.